Good afternoon and welcome to HYCM's webinar, FX Week Ahead Live Market Analysis with myself, Giles Coughlin. I'm going to be taking us ahead on the coming week and helping us to look out for key market events which give significant opportunities in the market. We've got quite an interesting week, so before we get stuck in, I'm just going to say hello to folks, and if you could just let me know on the questions that you're there, that'd be great. Hi Dion, Nadir, Ravi, again, nice to see you guys, and Van. And welcome Anna Trey, Buzabacorn, Dion. Nice to have you on board, guys. Hi Nadir, thank you for replying nice and quick. One thing that I'd say as I'm going through the FX week ahead, if you've got any questions or anything you want clarifying, don't be shy. Just leave a message on the question panel and I can try to answer your questions as we go along. And this is a quick disclaimer just to make you aware that as we're looking at different market scenarios, different currency pairs, different entries, exits, just to make it clear that this is not trading advice. So this FX week ahead is not designed to be a signal service or to give you trades that I'm expecting you just to put on and copy. The idea of this FX week ahead is a training and educational half an hour to begin to show you opportunities and how to go about approaching the market. So it's more an educational webinar. So just to make sure that that's clear, particularly as we're looking at different trading examples, that's really important to understand. But having said that, what I really want you guys to be able to do is to understand how do I spot opportunities for myself when Giles isn't here. And for those of you who haven't met me on this webinar before, my name is Giles Coughlin. I'm a currency analyst and I'm a trader for the ASAC hedge fund. So that's just a brief introduction to myself. As per usual, before we kind of look ahead to this week, we're just going to have a little look back at last week to see if there was anything significant. And indeed there was, as I'm sort of answering my own question. Now, one of the key points from last week was Australia's central bank have now moved to a neutral phase. And that has put a pressure on the Australian dollar. The Reserve Bank of Australia met last week, and what they did was they've sort of revised back their intentions of raising interest rates. For a long time, Australia's central bank, I think since about 2016, had been keeping their rates at a set level. However, last week they said they changed their forward guidance. They had been saying the next move is likely to be a rate rise. But what they did last week is they changed that forward guidance and said that they're moving to a more neutral phase. So in other words, the next move in rates is not definitely going to be an increase in rate hikes. So they've changed to a more neutral perspective, and that meant that last week they also revised some of their growth outlooks. So if you look here, this was from their meeting. You can see they've revised their growth outlook. Look, for June 2019, they say that they're expecting a GDP growth of 2.5%, and they're expecting CPI inflation of 1.25%. Now, previously, they had that 3.25% and 2%. So what that means is that they're less optimistic about the Australian dollar going forward, okay? So they're less optimistic about the Australian economy. And going into December 2019, they've changed the GDP growth from 3.25% to 3%. They've changed their trimmed inflation from 2.25% to 2%, and their CPI inflation from 2.25% to 1.75%. So you can see that the Reserve Bank of Australia met and they've changed their growth and inflation forecasts. Okay, so for those of you who follow this FX week ahead regularly, what impact would you have expected to have seen in the Australian dollar given the Reserve Bank of Australia, the central bank, being less optimistic about the Australian economy going forward? What impact would you have expected to see? I'll just give you a moment. Yes, Nadir. Excellent. I'll give someone else a chance to reply. What would you have expected to have seen on the Australian dollar, given that scenario that happened last week? Would you have expected the Australian dollar to have been bought, or would you expect the Australian dollar to have been sold? Olufemi, very good. Ravi, excellent. Well done. Dion, it's not that. You'd expect the Australian dollar to be sold on this information, okay? Because remember, a country's interest rate, when the interest rate increases, people buy that currency because you get an interest rate differential on buying that currency as the interest rate increases. So when the interest rate decreases, you get the currency being sold. So with the growth and inflation forecasts being reduced, it means the next rate hike is not necessarily going to be up. It's more neutral. So it's more like it could be a cut, which means the currency is sold. So Nadir, brilliant. Olufemi, correct. Ravi, correct. So let's just go and have a quick look what we saw last week. And let's just take the Australian US dollar. And we can see last week on this revelation from the Governor Lau, the Reserve Bank of Australia's central bank governor, we can see, look, as that information was released, the Australian dollar sold off heavily, okay, and it's being sold off still today. So that means going forward, just to make it be clear, going forward, the Australian dollar looks a good currency to be selling going forward. Okay, so I was trying to look at a retrace up to here to sell just when that data came out. I didn't want to chase the price. I wanted the price to move back up around to this area, the 150 exponential moving average on the daily chart. I didn't get the retrace. You're not always going to get the retrace, but you just need to be aware that the Australian dollar, that outlook has changed, and hence we see a reaction in the Australian dollar. Okay, that's what we're doing. That's what this whole webinar and this whole teaching process is about. It's about understanding what central bank's forward guidance is doing, so we can see how some currencies are more predictable than others at certain times. And that's one just very good example. So it's worth just spending a moment doing that. Okay, so I'll just move that down. So that was out of Australia last week. And well done, guys, who got that right. I'm really pleased that that's sinking in. Okay, now the slight complexity with trading the Australian dollar going forward is, remember, it can be affected by the US-China trade talks. The US-China trade talks are undergoing in China as we speak, and one of the difficulties that there is in trading the Australian dollar is if the trade talks are sorted out, then Australian dollar is going to be bought. So you've got to be aware, this isn't just a question of going short Australian dollar, because if the US officials over in China manage to sort out the US-China trade deal and the trade deal gets done, then that's very good for risk assets. And it's very good for risk currencies, the commodity currencies, and Australian dollar is one of them. So that'd be good for Australian dollar, New Zealand dollar, Canadian dollar. So you just got to hold those two things in tension. I just wanted to mention that so you are aware of those tensions that's involved. Also, we had New Zealand Q4 unemployment data came out at the end of last week, and we had an unemployment miss of 4.3% versus 4.1%. So the problem there is that 4.3% in unemployment level increased from 4.1%. So more people were unemployed. The employment data out of New Zealand only comes out once a quarter, so it's really closely followed, and that had a negative impact on the New Zealand dollar. So just bear that in mind as we come to the FX week ahead. We'll be returning to that thought. Also, the US-China trade talks. Munchin and Lighthizer are traveling to Beijing. They're in Beijing now, and they're going to be meeting with Chinese officials. Those talks are actually undergoing now, so they're underway. So it's not just Thursday and Friday. And there is a report from CNBC that the March the 1st tariffs deadline could be extended. The deadline at the moment is the 1st of March, and on that date, the 10% tariff is due to go up to 25% tariffs. Okay, so the question is, will that deadline be extended? Will it be delayed? The market's been looking at that very carefully. So those US-China trade talks are really, really important at the moment. And there you can see Lighthizer and München there. And just to remind you guys, repetition is the way of learning. That United States and China, between the two of them, make up around 40% of the entire global GDP. Okay, so you can't really underestimate how important these trade talks are, how carefully the market is looking at them. So also be aware that if the trade talks get, if there's breakthrough and the US and China make a good deal, then that's going to have a really positive impact on the whole global economy. Okay, a lot of countries are starting to now report being affected by the US and the China trade tariff dispute. Okay, so that's filtering through to a number of economies. Saw that in the Eurozone, reported out last week, and you know, the Reserve Bank of Australia has been talking about it, New Zealand's been talking about it, UK is even beginning to talk about it. So a number of countries are affected by these two nations who are, you know, having the trade tariff discussions. So just be aware of that, and to be cautious of positioning, knowing that this deal's going on. So you always want to think, well, how's the US-China trade deal going on? What state is it at? And one thing to make you aware of that. President Trump, if you notice, he's been a bit more positive about the US-China trade talks recently, and that's because in December the Standard & Poor's 500 sold off quite heavily, and that affected equity markets around the world. And the concern was exactly what I've outlined to you here, that if the US and China go to trade war with each other, it's going to have a terrible impact on the whole world because of the disproportionate influence each country has. So President Trump defines his leadership by how the Standard & Poor's 500 is doing. If it's up, he's feeling I'm doing a good job. If it's falling, he thinks I'm doing a bad job. So when the S&P 500 fell heavily, and he was being really aggressive, saying, we're gonna hit the Chinese, we're not gonna let them steal any more of our intellectual property, we're gonna make things more in the US, and these kind of big statements that President Trump tends to use, was really spooking the markets, and they were really like, okay, this is not looking good at all. Now President Trump speaks more optimistically, and he's been trying to boost the equity markets in the US, which boosts the equity markets around the world. So that's the big picture that's going on. So President Trump wants a trade war, but he doesn't want the market to get freaked out about the trade war. So you've got to remember, at the moment, President Trump is going to be saying positive things about the US and China. But behind the scenes, it's a very difficult scenario, because the US's dispute with China is essentially over intellectual property. They're saying that, when we get things manufactured in China, the Chinese companies are stealing the intellectual property from the US. So the US is trying to secure intellectual property rights. And that's the kind of one of the big issue. And China's involved in its own power struggles. There's also geopolitical concerns about the South China Sea and the South Pacific, and China wants to get a real dominant force there to make sure it's got a good supply chain. It can get regular oil supplies into the country. If it can control the seaways, then it controls its imports, controls the oil necessary to travel to power the whole country. So you'll see also this morning the US had a couple of warships in the South Pacific, and China were obviously reacting to that, defensively, understandably, this morning. So just to be aware, you've got to see through the rhetoric. The rhetoric is, yeah, we're going to get a deal done, because neither China nor the US want to unnerve the global markets. But at the same time, the issues are really hard and difficult to solve. So just to be aware that US-China trade war is coming in. The 1st of March deadline is creeping up. And so look for, talks going on this week. Okay. China itself, just to show you, I've showed you a number of times the slowdown in China's manufacturing. We're also seeing some fall down in sales too, particularly automobiles. You can see the automobile sales here, look, down minus nearly 10% year on year, December 2018. And we can see that we're beginning to get a down move. Petroleum related sales dropping heavily into year end last year. And we've got this general downtrend, a very slight general downtrend of catering, clothing, retail sales. Just that, you know, the trend is down. If you took this as a whole, and if you took an average, you can see that things are slowing down in China. So that again is, yeah, Dion, that's right. Trump likes to intimidate people. Yeah, he has a very unique negotiating style, doesn't he? He comes over very strong, and then all of a sudden a deal gets done. And we saw that with the NAFTA deal between Mexico and Canada. And we saw that President Trump was, you know, he'd say these big bad statements, but in the end, a deal got done. And I think that's really what's going to happen in this situation between US and China. I think eventually a deal will be done. It's just a question of how, when, and of course, it's always if. There's no certainties, especially not in the financial market. So you just have to be aware of that. But, you know, that's particularly coming into focus this week. It will affect the markets. Just to remind you, in a risk-on environment, we're going to see currencies like the Australian dollar is going to appreciate, the New Zealand dollar, the Canadian dollar. These are the high beta currencies. They appreciate when it's a risk-on scenario. When it's a risk-off scenario, we see Japanese yen, we see the Swiss franc being bought. So those are the you know, the way we'll see currencies react. Again, this is the China's manufacturing slowdown, just showing you again, January 2019. You can see that heavy fall going down to sort of, you know, the lowest levels in the official PMI, Purchasing Management Index, the lowest level since July 2016. And the lowest levels in the Caixin PMI since around July 2017. So really big levels. Okay, we've also got a Brexit timetable coming up. Brexit is, again, very much in focus. I'm just going to talk you through the chart with this one because it's a little bit easier to explain this with the chart than it is just to leave you without it. Okay, here's the scenario with I'll talk you through what's happened. When the pound was bought up here at the end of January, and that was to do with optimism that Article 50 would be extended. In other words, that there would be more time for the UK to get a deal done. Now, slowly, the pound has been selling off because what the pound has been realizing is that there still is a chance of a no-deal Brexit. This was a key pivot point on a technical area, and price reacted here. I took a little long here and just took a little bit of profit as price bounced off this pivot point. And price is continuing to fall, and it's continuing to fall now because there is really a chance of a no-deal Brexit. A no-deal Brexit will result in the pound being sold. And what's happened, at the end of last week, Theresa May went around the European Union trying to get a deal done with Donald Tusk, with Michel Barnier, and May was saying, look, you know, we can get this deal done. There's only one problem. It's the problem with the Irish backstop. Can you please help us solve this problem? Basically, the EU said, no, we can't. Brexit is your problem. Why don't you go on and have a word with Jeremy Corbyn, the Labour leader? Perhaps he can help you out. So EU have literally said, no, we're not going to help you out, Theresa May. We're not going to extend. We're not going to allow this Northern Irish backstop problem to be solved. Instead, we're going to make you go back and try to sort it out within the UK with a different political party, with the Labour Party. So now we can see the pounds being sold on this data. But this is the key situation. But if yeah, this is it here. This is Jeremy Corbyn. That's the political lead. That's the Labour political leader. And this is Theresa May. She's the Conservative Tory leader. If they manage to negotiate a deal, then the pound will rally. And the reason the pound will rally is because there'll be absolute relief that Britain has secured a Brexit deal. So we're at a crossroads with the pound. if it looks like the deal is going to get done, then we'll see a big rally in the pound. Okay. If it looks like the deal isn't going to get done, we're going to see the pound selling off from here. So we're looking to see, I'm looking to see what's going to happen between Theresa May and Jeremy Corbyn. If it looks like it's incompatible, then the pound is going to continue to be sold off, because when you look at the timetable, you can see that Britain's running out of time. 29th of March is the deadline for the withdrawal of Britain from the European Union. Okay, so we're only about 50 days away. So time is really running out for Theresa May, and we've got a number of key kind of issues happening. On the 14th of February, we've got a big Brexit debate in the House of Commons. So in just 3 days, a big Brexit debate is going to come up. That's the first thing on the agenda, and that's the first thing to be looking at. So at the moment, I think the pound is a sell-on rallies scenario, but that could change any minute, particularly with the Jeremy Corbyn and Theresa May. And Theresa May has expressed a willingness to talk with Jeremy Corbyn. So there is a sense in which there could be some, way forward on that. So be aware of that when trading the pound. Last week we had the European Commission revised down its growth for the EU countries. So that's just to be aware. Look, as it says here, all EU countries are expected to continue to grow in 2019, which means more jobs and prosperity. Yet our forecast is revised downwards, in particular for the largest euro area's economies. This reflects external factors such as trade tensions and the slowdown in emerging markets, notably in China. Okay, so you can see here that the European Commission has also downgraded its forecasts for the Eurozone. We've also got problems in Italy for the Eurozone. We've also got Brexit, and Brexit weighs on the European Union as well as Britain. So there's a lot of negative news out for the euro at the moment. So at the moment, there's bearish pressure on the euro. So just to be aware of that going into this week, that the euro is under pressure because of this kind of information. Now, as we look at the FX a week ahead, I just want to show you just call up the calendar from HYCM, and we'll look at the details that we have. And we have a nicer opportunity to call sell the rumor and buy the fact. I've spoken about this before with you guys. What we had today, we had this slowdown in UK manufacturing and industrial production, and the GDP level has fallen. So GDP is fallen, it's 0.2%, it was 0.6% previously. We got manufacturing production falling minus 2.1%. And if you notice from the actual data here, that the GDP is plus 0.2% versus 0.3% quarter on quarter expected. And the key aspect is total business investment is down minus 1.4%. So a lot of the drag on the UK economy is to do with business investment. I've said this a number of times, and this is due to the fact that people don't want to invest in Britain while Brexit is still uncertain. So I sold the pound off last night in anticipation of this week data, and I'll show you. Let me show you the way that worked. So when you sell the rumor, what that means is you're seeing. I looked at this at the end of last week, Friday, and I can see, look, business investment expected to be down minus 2.9%. You can see industrial production minus 0.4%. You can see that the GDP was down 0.2% versus 0.6% previously, expectations of 1.4%. So I thought, okay, that's really quite bearish for the pound. So going into Monday morning, what do you want to be doing? You want to be selling the pound, okay? So that is what I was doing, at the open of Sunday and early this morning, and then just closing the position out before the data is released. Okay, that's what it means. You sell the rumor and then you close out before the data is released, and then buying the fact is then you reassess depending on how bad the data is. Now the pound has continued to fall because the data was even worse than expected. Okay, so that's how you handle that. There is a New Zealand official cash rate and policy statement. So there's another opportunity to sell the rumor coming up. Again, this isn't trading advice. This is just education. But if you look at the New Zealand official cash rate and policy statement, is due out on Wednesday, 13th of Feb. So I'll show you the data here. This is the key data. So there's not much on. You got Carney speaking again. He's going to be talking about Brexit. We've got Jerome Powell speaking on Tuesday. Again, that's worth listening to because he's the chair of the Federal Reserve, and the U.S. central bank leads all other central banks across the world. And that's I won't have time to go into that now, but I could explain that lead in more detail if I had the time. But for now, this is what I want to show you. It's this interest rate decision from the Reserve Bank of New Zealand, the rate statement and the monetary policy statement and the press conference. Okay, so you remember you need to take these all together as a whole, and you need to remember that. And then Governor Orr when's Governor Orr? He's speaking again there. He's speaking later on as well. Okay, so remember here, you need to see this as one meeting. You've got the rate decision, the rate statement, monetary policy statement, press conference, and then you also have Governor Orr speaking later on the same day, 7:10 GMT time. So if there's anything he wants to alter, he can alter it there. So you have to be aware of that speech. Looking at the monetary policy statement, the rate statement, interest rate decision, the expectations is for the rate decision to be exactly the same. No one expects it to be anything other than 1.75%. That's what the official cash rate almost certainly will be. However, remember, the market is not looking what's happening now. The market's always trying to look ahead. What's likely to be happening? So the focus is going to be on the rate statement and the monetary policy statement. And what's expected is expected for the Reserve Bank of New Zealand to say, okay, we're going to revise our growth down. We're not expecting to be raising interest rates now, even later. So what people are expecting is similar to what came out of the Australian central bank, the Reserve Bank of Australia. They're expecting a slowdown in growth, inflation, forecasting, less likely that there's going to be a rate hike, although the New Zealand central bank has been more neutral anyway. However, what folks are expecting, analysts are expecting, is that that's going to be a weaker reading. So going into that rate decision, what would you be expecting? Would you be expecting the New Zealand dollar to be bought, or would you be expecting it to be sold? Another question for you guys. So going into the rate decision, rate statement, monetary policy statement, if we're looking to sell the rumor is that they're going to have a more bearish outlook. So what would we expect to be coming from the Reserve Bank of New Zealand? Jot it down in the questions. If you guys are there, Nadir, Femi, Ravi, what would you expect the New Zealand dollar to do, given that the expectations from the market is that they're going to reduce growth? And yeah, Ravi, that's exactly right. Yeah, you've got it. Well done. Nadir, super. That's right. You've got it. See, well done, you two. This is how you sell the rumor, okay? You see, the rumor is, this is what you do each week. You look for events. What's the expectations? What's the market expecting? And then you can see how to position yourself for that. And then you look at technical places to enter, okay? You don't necessarily just want to be selling from anywhere. Look at good technical places, and you can find places to enter. So that's how you sell the rumor. And then just before the data is released, you close your position out. You can hold if you want to risk, but then as soon as the decision is live, then that's new information, and the market's going to react in a new way. But into the meeting, everyone's expecting New Zealand dollar to be sold. Okay, so next up on the agenda is the CPI. So that's the inflation data out for the US on Wednesday at 1:30. You can see that US CPI data, the inflation is set to continue to fall. You can see expectations of 2.1% and 0.2% month on month. So we can continue to see, this downward trend is expected to maintain. And obviously with the US, what's happening with the US is the market's trying to understand, where is the US economy? The Federal Reserve rather is taking a more dovish stance. They're not going to be hiking rates as quickly as they were expecting to. So they're saying we're on a pause mode. And obviously the CPI data and then the retail sales data out on the Thursday, and on Friday we don't have anything particularly of significance scheduled. Obviously, you've got CPI data out of China, which will be viewed. And remember, which currency is particularly susceptible to Chinese data? Quick last question for you guys. Which currency is particularly susceptible to Chinese data? That's it, Nadir. Very good. It's the Australian dollar. So remember that the Australian dollar is often traded as a proxy for China's economy, because when China's economy is doing very well, then the Australian dollar will do well because of the close links between the Australian economy and the Chinese economy. Australia's GDP is about 30% is linked to their trade that goes on with China. So what hurts China hurts the Australian dollar. What's good for China is good for the Australian dollar. So it's those retail sales that are coming out in the US as well. And there's one last event I just whipped past, is GDP for Q4 for Germany. Now we know already that the GDP data has been quite poor out of the Eurozone. So expecting expecting a 0.1% level. You can see that the graph is dropping. It's dropping to the downside. Okay, so you can see this fall in Germany. Germany is very important for the euro because Germany is the leading European country. So again, German data affects the euro quite significantly. Okay, guys, we've covered a lot this day, which is really good. And what we'll be looking at, one last thing, I just want to tell you, February is a very good month for oil seasonally. This is the seasonal movement of oil. You can see that the oil has a seasonal pattern. In October, November, December, it tends to lose value as a whole. February, March, and April, it tends to pick up in value. So you can see that there's some key oil data coming out this week, Tuesday, Wednesday, and February has, there's been some very good months in February for oil. So those seasonals, there's reasons behind these seasonals. So oil could be potentially a good trade going forward. Again, it's not advice, but look for sensible technical places to enter. We've seen a little bit of a retracement into the start of February, and looking at the data coming up, this could be a good opportunity to go long on oil and trying to take advantage of these seasonal moves. You have to look on the charts to see your own places to define limit risk for any potential trades there. Again, not trading advice, it's just education, and this kind of seasonal information is very helpful, very useful to know. Okay, guys, that's the end of the session this week. Look ahead. We enjoyed it, and I look forward to seeing some of you guys again tomorrow, 1 o'clock to 2 o'clock. And what we'll be trying to do on the workshop is just a little bit more practical, going into some intraday news. Where can we look to enter trades? Where's a good place to define, limit our risk, and how do we take advantage of that market sentiment and mood that's going on there? So it'd be great if you could join me 1 o'clock to 2 o'clock tomorrow. Thanks very much for joining me on this webinar. Okay, Dion, question, Australian dollar, New Zealand dollar to buy or to sell? That's a good question, isn't it? If you look at them, Australian, New Zealand dollar, to buy or sell, if you think going into the New Zealand Reserve Bank of New Zealand rate statement, you can see that it's bearish. So you'd think that's an Australian, New Zealand dollar buy. And if the Reserve Bank of New Zealand becomes more bearish, then I think that's an Australian dollar, New Zealand dollar buy. So you know, Australian dollar, New Zealand dollar is an interesting pair, and it can be a good pair to trade if you want to avoid, risk on, risk off flips in the market, because they're both high beta currencies. I think the Australian dollar is marginally stronger than the New Zealand dollar at the moment, but obviously with key data coming out on Wednesday, it remains to be seen what the central bank is forecasting and how the market interprets that forecast. So Australian dollar, New Zealand dollar to buy or sell, I would prefer a buy, Dion, but then you have to make sure that makes sense on your risk, your reward, where you're entering your trade. Okay, John, I hope that's a little bit helpful. And Dion, not Australian dollar strength, more New Zealand dollar weakness. So against Australian dollar, New Zealand dollar, I'm looking for the New Zealand dollar to weaken. The Australian dollar is weakening because it's weakening due to the Reserve Bank of Australia changing their growth forecasts. However, against the New Zealand dollar, I would anticipate it to be strengthened in relation to the New Zealand dollar. Okay, I hope that's clear. Hope you guys have a good day, and I'll see you tomorrow for the webinar here, 1 o'clock to 2 o'clock. Okay, guys, take care. Have a good day. Bye. Yeah, see you, Nadir. See you, Dion. See you, Ravi. Take care, guys. Bye.